how you use it is different depending on the environment. So how I would use the ATR now is because
It's
we're in
right
such a
here.
dangerous environment. Thank you. So, and you can find it in the lists as well, but we wanted to put it right, and you can screen on it. We wanted to put it right in front of you. That was a big deal for us. So how do you use the ATR? The In an environment like this, I would focus on lower the better. So a 4 ATR or lower. What does that mean? 4% that it travels on from its high to its low on a daily basis over the last 21 days. Does that mean it's going to happen that way in the future? No, but it's a pretty good gauge. If something travels 10% from high to low for the last 21 days, you don't want to trade that right now. Like, unless there's a specific setup or there's always exceptions, but right now you don't want to do that really. You want something like this. The lower the better. At 2.8, that's very low in a setup. So you're looking at this, I think it's viable right here. We'd be adding it to swing trader right now if it wasn't that we got hit so hard yesterday. We kind of have to when you get hit, you kind of want to stop and think for a little bit and just observe, because you don't want to be trying to make back what you lost. I will put something on if it's like an A plus setup today, but this is an A setup. It's not an A plus. So let's go through that. So the 2.8 helps you out in that. How far away are we from the pivot? Well, right below
Mhm.
that, you can see right below the 2.81, it shows you are 4% from your pivot. So, down to the 520, that's about 4, and that's a little bit more than 1 ATR. And typically, if you're buying something, you want to have about a 1 ATR stop loss. It can be a little bit more than that, and it can certainly be less than that. But you want to go into it assuming you're going to lose an ATR. So with this, you go into it with the assumption you're going to lose 2.81%. If you go into, pull up Octa, because
Yeah.
that's like kind of the poster child for high octane. And they're higher octane than this. Oh, it's down to 5. What's a high octane one right now? Like the highest that you can.
Oh, BE, right? We were talking about that the other
Yeah,
day.
yeah. So BE that I've been trading off and on for a while now. I don't have it right now, but might later. 11.2. So you go into that and you think, okay, well, I'm going to take a 1 ATR. So my loss is probably going to be 11.2% before I even know that there's anything wrong. And I can tell you, yeah, that's probably what's going to happen with this one, because I've traded a lot. So let's go back to what we do want to trade, which is the HCA that we were looking at.
Hmm.
So this has a few things going for it. It's got the low ATR that we talked about. It's not too far from its pivot in ATR terms, not a percent terms, but in ATR terms, it's
Yep.
just a little bit over an ATR, like 1.5 or so. So that it has that going for it, and it has the RS line moving up. It has yesterday being blue or green, depending on how you look at it, up on a bad day. That's going in through the outdoor. Like that's a good thing. And not only was it was up a lot, closing at its highs at the top of a range. So it's telling you someone's in there accumulating, and you've got the earnings behind you. God, I'm talking myself into buying this in a second. But and then you've got what I would call today, if we close here, this is what I would call Webby setup day, where you have this is like a classic Webby setup day in a Webby shelf. So the shelf is this little
Hmm.
structure, 2.5 weeks that we've had sitting on top of the last base. That's where you want to see the shelf, because it's just paused there. It's being accumulated, in my opinion. Then you have a tight spread, meaning the distance from the high and the low is really small, and you're almost at the top of your closing range. So anything like 75% or higher closing range, your expectation is the next day it's going to blast out. Now, it might do it later today. But this is, setting things up for success, or also for the failure would be yesterday's low. That's where I would let this one go. Now, let's go to the weekly on this one, if you don't mind. That's just a beautiful thing, that earnings line. And I still remember when we didn't have the earnings line in Market Surge, and it's so nice to have it because that's what we had on the institutional side of things. So now I look at this and it reminds me of an old Wanda chart. We've got the quarterly info on the bottom laid out so nicely, lined up with everything, and you've got the earnings line on there, and you've got the estimates going forward. That's just, there's more for us to build on this, and eventually we'll continue that earnings line out with the estimates, and we'll just be building and building and building on it. But this is really, a huge improvement. Now let's go to the monthly to kind of get the character of the stock.
You bet. Monthly.
And, again, this just really nice trading stock with a couple of exceptions. So what I would do is those really bad months in there that it had, I would go and look and see like, okay, what happened there? We don't have to go there now, but you just go, okay, I was really the bad breaks that those ones.
COVID and this other one.
Yeah. So just look and see, so COVID explained it, then you go in that one and then you just see what's going on there. But besides that, you're just looking and seeing, okay, how is the RS line trending over time, and how is the stock trending over time? And so it's not a mega, huge stock, but it's been a leader. And it's really, go back to the daily, it's really about yesterday's action, like seeing that positive divergence with what the market was doing. So the market's falling apart, everything is getting killed, and this one is holding up and not even coming down to the 520. That tells you that there's some buyers in there that, in my opinion, didn't get enough shares and were using yesterday to soak things up. So I think it looks good.
Right.
You don't have to buy anything now. Like, again, we had that devastation yesterday. Like, I just want to warn people, like, don't feel like you have to buy anything, but you want to observe. And what you would want to do is look at this and say, okay, this is a good setup. If we're in a healthy market, this should go through the 550 Livermore-ish area, then take out the 552 and build from there. Go to BTSG. They tried to break out the other day, and we were discussing it, and I think Chris had mentioned something like, I wouldn't trust it up here, and I was looking at it going, well, that's just how I know to buy on strength. And sure enough, by the end of the day, it just came right back in, and that was a sign. Now it's holding up, but it's telling you that anything that's lifting, they're still, like Justin called it, the whack-a-mole, they're still selling that down, and that's a very hard market to be in if you like to buy on strength.